Alright guys, welcome back. So I hope you're having a good week in your trading. I think a lot of you are going to get a lot of value in this. And this topic actually stems from a question that I got from a trader, and he said, when you explain about mitigation, it happens from both sides at the same time. So which side are we supposed to choose? And it is actually a really good question. I have covered something similar in the past when I talked about the fractal nature of the forex market. So if you want to check that video out after this one, it may give you a bit of a broader understanding, or a bit of a better and broader understanding of this topic, right? If it's the first, I'm sure it isn't, but if it's the first time you've sort of come across this concept. So mitigation happening on both sides. Now, I'm not going to go into too much detail around explaining why mitigation happens. Obviously, I've done a lot of videos on that, and a lot of you already understand, right? You most likely wouldn't have clicked on this video if you didn't already understand. Okay, so basically, he is right. Right, mitigation happens on both sides of the market all the time. So let me just give you like a rough, an outline of how the forex market actually behaves. Right, so the forex market is made up of a lot of different types of market structure, right? So everything that we see here is market structure, okay? And generally, what we're going to see is we're going to see phases of tight ranges, right? Like this, okay? Like this sort of area here. We'll then see areas that expand, right? Where the price moves away, expands from a certain price point, moves away from the price point. We'll also see sharp reversal points, right? Similar to this. Okay, so, sharper reversal points, right? Similar to this. And ultimately, the market, no matter what sort of order it is, it will basically just repeat these cycles. So these consolidative areas before our expansion are commonly known as accumulation phases, right? This area where we see the expansion or the trending market is commonly known as a markup phase, right? Trending down is a markdown, right? And the areas at the top of our range, okay, before we get the markdown, is called distribution, right? In our areas of accumulation, right, there are market participants that are accumulating orders, okay, buy orders, and then we see the market mark up. Okay, and alternatively, in the distribution areas, we see them selling out of buy positions and entering into short positions, right, to take the market short. Okay, now this is what's known as the Wyckoff price cycle, right? And ultimately, what you'll find is that no matter what time frame you're on, no matter what market you're on, the market will just repeat this time and time and time again. Okay, so if we are on let's say this is a monthly time frame, right? If I was to zoom into this area here, right, what I'd actually see here is this. I'd see that markup, okay, some distribution, right, a markdown, some accumulation, right, a markup, some more distribution, right, and a markdown. Okay, so this is, let's call this the monthly, right? This is our monthly time frame, right? This is our weekly. Okay, so we've gone from the monthly to the weekly, right? And as you can see, the monthly, we have these areas of accumulation, markup, distribution, markdown, right? Accumulation, markup, distribution, markdown. Obviously, it's not always going to happen like that repetitively. We're going to have, different phases at different times, right? But you can see when we move down to the weekly, right, it just looks like we're in an area of distribution, right? But we've actually got a small markup phase, an area of distribution, a markdown, some accumulation, a markup, some distribution, and a markdown, right? And if I was to zoom into this area on the weekly, on the daily, or or on my hourly time frame, I'm going to see a similar thing. So I'm going to see a markdown, some distribution, a markup, a little bit of accumulation before a markdown, some distribution that may tap into an order block, and a push higher. Okay, so obviously something like this that just looks like a pullback on the weekly, if we're going to look on the hourly time frame, we've actually got a larger area of distribution that we can see, but these swing points here that are just look like swing points on the weekly are actually going to be a markup, a distribution phase, and an accumulation phase, right? So the market is fractal, right? And basically what that means is the same types of moves that happen on the monthly are going to happen on the weekly. The same moves that happen on the weekly are going to happen on the daily, on the hourly, and so on and so forth, right? All the way down. So what you've got to understand about price is price will move from areas of liquidity to areas of liquidity, right? And it uses them areas of liquidity to reach for other areas of liquidity. Okay, so whether liquidity is there's quite a broad term, right? So mitigation block or an order block can be liquidity, right? A fair value gap or an imbalance can be liquidity, right? Or is liquidity. Okay, an area like this above a swing point, like a liquidity pool, that is an area of liquidity, right? There's liquidity everywhere on the price chart. Obviously, there's just going to be some areas that are higher than others, right? Like higher liquidity than others. Okay, so you think, right? Let's say that we had like liquidity in terms of lines. If we could see all the liquidity, we'd have a really dark solid line down here, and as we sort of move up, it will get lighter and lighter and lighter. Okay, now so obviously we can see that there's a lot of liquidity down here, right? There's a lot of liquidity up here, right? And through these gaps, right, and the mitigation areas. So what we'd expect to see is price to come down, use the area of liquidity, the area of high liquidity, sorry about the state of the drawing, right, use this area of high liquidity to then accumulate orders. Again, remember our schematic, right? Mark down, accumulation, mark up, and then distribute orders, right, to then take price to another area of liquidity, right? Or generate some more liquidity to then run into to take price to another area of liquidity. Okay, mitigation does happen on both sides of the market, right? It always has, it always will. Okay, and that's the same for every type of smart money concept, right? A liquidity driven concept, right? It's going to happen time and time again on both sides of the market. Now, the question was, how do we know what one to choose, right? And that is going to be very dependent on what time frame you're looking at, right? You as a trader, okay, and how you're looking to approach the market. So what are we on here? I think we're on a 1 hour, right? And let's just use this for an example. Okay, right, we're pushing down, okay, and let's just say that I want to use this area here to take a long position, right? Why not take the short position, right? Now again, you can, right? You can take this short and then into this order block to then take this long, right? It doesn't matter sort of which one you choose, really. Okay, but some things you may want to consider is trend. Okay, so let's say that you're in an uptrend. You may want to only take the trades, right, in the direction of that underlying trend until price gives you an indication that it may want to reverse, right? Then you may want to look for the order blocks on the opposite side. Okay, so let's say that we're moving up like this, right? We only want to be looking at the order blocks that are in line with this trend, right? Obviously, if you're looking for the hourly to keep running higher, then of course you're going to want to be taking the order blocks at the bottom of the market, right? Now let's say that you're not on an hourly time frame, even though on the hourly time frame you have got a bullish perspective, but you're scalping on the 1 minute. Now, of course, you may then recognize that you've hit an order block and you're traveling down now, okay? You know, let's say that you didn't get into this order block, right? And you just tapped in and it started to move down, right? You may wish to get involved on the downward moves on that trend, okay? So as the market's trending down, right, you may want to get involved in them moves, okay? Short term, right, until you get to a higher time frame area of interest, right, and then you look to take the market long. So that is the thing with trading, right? Obviously, where the markets are fractal, there's always a potentially different narrative, right? So you know, on the hourly time frame, we may be moving up, we may be in a bullish trend, okay? So you know, even though we have got these areas that are, you know, we're propelling price from these order blocks, moving it up to mitigate other order blocks, right, or other mitigation areas, okay, we're still the money is still moving upwards. Now, obviously, this may be just moving up to, obviously on the hourly time frame we're bullish, right, but on the daily time frame we may just be moving up to a higher time frame order block, right, that's gonna mitigate and take the market short, right, and then of course we can then look to take the market short. But at the same time, like you've identified, there's also going to be opportunities to take the market long. Again, it's going to be time frame sensitive. Obviously, you know, if the market is overall moving down, you know, you're going to have limited trades on the up on the bullish side, right? Maybe on like a 1 minute, 5 minute, they may be more significant, okay? But one side is going to be more dominant. Just to summarize, right? Because I know I covered a lot of different points. Mitigation does happen on both sides. You're right, and the reason it does that is to propel price from areas of liquidity, okay, to untapped areas of liquidity. Right, so obviously now we're in this liquidity. How do we get down to mitigate this order block? Right, we need to use the liquidity to sell into the order block, right, taking this liquidity, okay, generating more liquidity. Again, how do we do that? We generate even more liquidity, tap into the order block, right, and the cycle continues. So I hope you got value from the video. If you did, be sure to hit the like button and subscribe to the channel, and wherever you are on your trading journey, I hope you have a good week, and I'll see you on the next one.